Hello everybody and welcome back to UNE's College of Business YouTube series. My name is Isaac Jordan. It is my honor and my privilege to be your host today. Today I am joined by none other than Doc B. Some of you may know him, but for those of you who don't, he's a professor here at UNE. He teaches economics and finance. And I would say he does a pretty good job of it. So I had some questions here for you today, Doc B.
Yeah,
so
shoot.
Just to begin with the very basics, I think something that's very important and might be on the minds of a lot of people just because of the fact that the new year, just around the corner, is a time where a lot of people might look at changing some of their habits, right? And I think in life, money is something that's very important. People might be considering, how can I manage my money better? And I think one great way to do that is by investing, especially when you are young, like a student here at UNE. So I wanted to hear your take on that, starting with pretty much just the very basics of what investing is.
Sure. So investing is the act of putting money towards real estate, stock market, bonds, and other like-type investments for your future. Right? You heard real estate, and real estate generally meaning you can collect rents from real estate and it appreciates over time. The stock market, that's going to pay dividends. You can reinvest those dividends at compounding interest, and you can gain a lot from that. Now, more volatility in the stock market than there would be, say, in U.S. Treasury bonds, especially, say, the exchange-traded funds that track the U.S. Treasuries. But that's generally that, just the act of putting money towards that effort. Okay? And so the hardest thing that you can do is stay the course once you invest. The easiest thing you can do is say to yourself today, I'm going to become an investor.
Okay.
Make sense?
That does make sense, yeah. So pretty much you're putting your cash into something that over time is going to hopefully raise in value, allowing you to make a profit.
The intent, yes.
That's the intent, yep. So you did mention that there is obviously some risk to this. You're not going to be the winner in every case. So maybe could you run us through what some of those risks might look like and how a new investor should try to avoid some of that?
So if we had an hour, Isaac, we could go through all of the risks, right?
Things can definitely go wrong.
I'm going to talk about systematic risk.
Yeah.
And this is where someone's risk appetite may decelerate, if you will. Like, I'm not so sure I wanted to be in those investments, right? So you have the systematic risk, which is market risk, or geopolitical risk, or any existential risk that causes your accounts and everyone else's, generally, in investments to deteriorate, right? How you handle that risk and how you determine your risk appetite are two key factors here. You have to set clear goals. What is it that you would like to accomplish as a beginning investor, right? Do you want to, what is your time horizon, right? So if your horizon is short term, like, I'm going to graduate from UNE and I'm going to continue my academic coursework in a master's program.
Right.
But I'm not quite sure how I would like to pay for that. Could I invest now when I'm 20 and I'm in my 4-year program for a master's program down the road? Yeah, you could probably put a dent in that with some of the earnings that you bring back. Your return on investment is key in this, under those conditions.
Right.
Right? Medium term horizon, whatever that is, right? Long-term horizon could be, this is for my retirement. I think I should open an individual retirement account.
Absolutely.
Right? Perhaps a tax shelter, right? That allows you to recognize your retirement at a later year, right? And so all of those things combined, the person who would like to invest today should actually write that down. What are your goals?
Okay, so you definitely want to understand what you're trying to achieve before you dive into the deep end of this pool and maybe you get lost.
Absolutely, absolutely. Market volatility, right? You could have a stock like Palantir, or you could have a stock like Ford. Right. Palantir, perhaps implied volatility of over 150%.
Right.
Ford, not so much. Ford pays a dividend. And it's generally, if you looked at a chart of Ford, you would see it mostly going sideways between, say, $11 and $15 over the last couple of years, right? Palantir, anywhere from 200 to 100. You take a risk It's your risk appetite.
Certainly.
But what I recommend for beginning investors is, especially if you're young, take that risk. Could you at 20 lose, say, $5,000 and make that back in your lifetime? Could you do that at 80?
Maybe not so much.
It would be a bit difficult, right?
Absolutely.
And so you'd want to test that, right?
Okay.
You want to set those clear goals up front before you even begin.
Okay, so I understand my intent as an investor. I know what I want to get at, but let's just say I have no knowledge of how I can even get into this. I'm absolutely clueless. So as a truly beginning investor, where should I start once I have this intent in mind? Maybe as far as picking where I'm going to be dealing with or exchanging these securities.
So are you referring to, say, a brokerage firm?
Yeah.
Like, where do I begin?
Yeah, where do I even just, am I going to go on my phone,
Excellent
my laptop?
question, Isaac. Excellent question. So there's many different brokerage firms, right? And you could do a search for them. One of the great ones is Fidelity. I mean, you could actually, they offer fractional shares for those beginning investors that may only have a couple of $100 or $500, and you want to create a portfolio with fractional shares, right? Yeah, you could continue those investments in the stock market using exchange-traded funds or just individual shares of stock in a company that you're interested in. But my suggestion would be do research on these companies.
Yeah.
Do research on the return over time. The returns over time are important, right? It shows you the general trajectory of what those returns could be, both risk and reward, highs and lows. Right? Have a place where you want to enter the market. Don't try to time the market. Just understand this is my entrance point and this would be my exit point.
Okay.
I'm not actually saying every investor should be a trader, but understand it's for the long haul, right? And again, we go back to time horizons. Pick one. What do you want to do?
Yes.
For each one, you should still have an entrance point and an exit point, meaning in terms of price, right? If you're not hungry for volatility, you could choose an exchange-traded funds that track the U.S. Treasury bond, right? Say the 10-year note, 2-year note, whatever it is. So you're in an exchange-traded fund that tracks the U.S. Treasuries, right? You want to be able to understand that those returns, as far as yields, right, and would not be as much as, say, being invested deeply in the stock market only, in equities versus treasuries.
Now, again, just get like a very rudimentary idea of when I'm choosing my stocks, I'm choosing my ETFs, I'm choosing what I'm buying into. What exactly does it mean? When I'm buying a stock, when I'm buying one share of a stock or buying one share of an ETF, what exactly am I doing? For those people that truly don't know, because I do know some people who really aren't sure what they're actually getting into when they're buying a share.
That's an excellent question, Isaac. So I'll try to answer that with, let's use an example.
Absolutely.
Again, let's go back to, say, Ford Motor Company or Corning as a company. You buy one share, you become an owner. You're an owner of that company. You are sent a ballot for voting on that board. You are sent you're sent information relative to that company in the mail, right? Or digitally.
Right. Yeah.
So yeah, you're an investor in that company. You have some ownership. If it's one share, that's great. If it's 1,000 shares, that's great too.
When I'm buying into this company, if they're performing well, my portfolio is performing well, is essentially the concept here.
That is the concept. You want growth, right?
So buy what you believe.
Another risk is business risk, right? So decisions made at the higher levels in management may backfire. And so it pays to keep an eye on those shares that you own.
Okay.
Unwrap those companies and dig in. Check their balance sheet, their income statement, their earnings,
absolutely.
Right? When it's earnings call, lend an ear to it. See if you want to stay in that particular company for the long haul, right? There's nothing wrong with switching gears here.
Right. That is always a viable
Right.
option, yeah. I do think that that is important and something that some people might overlook, but I think you, as much as you might just want to buy into something and say, oh, well, it'll go up, you know, when I retire it'll be worth a lot, but being an active investor sounds pretty important to me.
So being an active investor is important. It forces you to do your homework, right?
Yeah.
It forces you to do the research. And we've discussed this in classes before, where it's important, right? It's essential. There are others in the community that prefer to be passive investors and have someone like you or myself manage that account.
Right.
Right? And we do the best we can, but again, there's that systematic risk, and there's nothing we can do about that. But we can weather the storm, right? We could dollar cost average into our investments and hope that returns are substantial enough to meet our clear goals that we set before we even set out on investing.
We understand what we're getting into now. We understand that you need to have intent. You need to, once again, you need to really understand what you're buying into, make a good informed decision. But we're going to take another couple of steps back here. Why do we care? Why is this important for my life? Why is this something that I should be doing as an individual?
I think intuitively it would prompt you to think about the future. Okay, so what is the future value of any investment you've made? If you haven't made an investment, then there is no future value. I mean, that's pretty simple, right?
Yeah.
But it's awfully nice to calculate the future value of your investments today, and realize that you're saving at a rate that is acceptable to your plan that you set out. Right? You set out to invest, but what were your expectations? What was your time horizon? How old are you? Right? How long can that play out to where it gains traction in the sense of, I know I can leave a legacy now. Not only have I made enough, I've made enough that my children and/or grandchildren could benefit from this legacy.
Yes.
Be it, again, real estate or risky assets, stocks, exchange traded funds, bonds, right?
Yeah. I think that is absolutely crucial.
If you were to just take $50 a month, $100 a month, if you could afford that, and put that to those assets we just discussed, you would gain so much.
Yeah, that is something that I think about a lot. Is I think some people have the misconception that you need to come into it with a wild amount of startup capital, or you need to be able, you need to be making a bunch of money to even put away anything meaningful. But the real truth here is that by making smaller sacrifices, even on me, I just have a couple of work-study jobs. My income isn't crazy.
Right.
But as long as I'm putting in some every month, every week, some percentage of my income, I'm still going to be able to set myself up in the future to receive the benefits of my actions.
Absolutely, Isaac. You're correct in everything that you've said. It's very important that you have a notion of what the future looks like for you. Clearly, any student would think the same thing, right? Within the UNE community, I have an idea based on the major and/or the minor or my program of study where I want to go. Well, do the same with investing.
Right.
And what you're saying is very smart. It's even if it's $25 a month that you can scrape up. You know, everything is a trade-off, right? You have a $8 iced coffee from a very high-end coffee shop, right?
I apologize to the pub for the advice that we're trying to give right now, but proceed.
This isn't a ding on the pub. This is a ding on a high-end coffee shop in a commercial sense, right? So you have a high-end coffee shop drink, right? It's $6.50, $8, whatever it is, right? And that $6.50, $8, is that, do you need that or do you just want that?
That's an important distinction.
Do you need to take that money and put it over into your investments, right? That's another $6.50, $8 you could put and just maybe drink some sort of substitute, tea or coffee.
I mean, I like water a lot.
In the sense of it doesn't have to be that expensive,
yes,
right?
Absolutely.
So watch what you do, right?
Yes. Gotta maintain that.
Count
that
your
balance.
dollars, count your cents, right?
Understood.
So
Good.
It's that way for investors, and you can learn a lot from those that are already in investing, and it's a good thing. It's a good thing for your future. So
now you say it is good to watch out for that through the advice of people who are in investing, and I understand that you are quite involved in investing here at UNE, and I was wondering if there's anything that you could potentially share about that.
as far as investing personally or the investment club under the UNE flag?
That would be the club.
The
Under
club,
UNE flag.
yes. The investment club at UNE is in its early stages, relatively speaking, and it's run by some great folks. It's student-led, student-centered, right, and student-driven, with an investment policy statement that we're about to go over next week that provides us with the opportunity to trade a portfolio. And so for those interested, it would be a great place to start. The door is open, as all investment clubs are under the UNE flag. It's great, right? Come to a meeting, right?
Come to a meeting.
Come to a meeting.
When's that? Wednesdays, correct?
Yeah, well, you know, we're still hashing out those times, but normally it would be on a Wednesday after your classes are over. Come see us, right?
Absolutely.
But we'll definitely put that out in a schedule, which would be broadcast across the UNE community. And definitely show up to that.
Yeah.
That's going to be important. Right
Keep
there.
your eyes and ears peeled for more information on that.
Ears to the
right?
track.
Absolutely. So as we approach the end of this interview, I'd like to ask you anything that you would like to say as somewhat of a closing remark or piece of advice that you think is crucial for people to hear.
I would say, I would echo what I said earlier. You know, one of the hardest things to do is to stay the course while investing, okay? You'd never want to take your investment and go buy groceries with it, okay? That's the best advice that I can give. Keep that money in those accounts, whether it's a certificate of deposit, which currently is roughly 1.9 to 3.5%, and just let that compound. Let that compound over months, years, decades, okay? It's important. That is my best advice for people just starting out and those that are in it.
Understood. You know, as the people in the Lorax, they say, let it grow, right?
Yeah,
Absolutely.
let it grow. Let that money grow.
Absolutely.
Let it compound. Isaac, thank you for having me. This
Thank
is
you
great.
very much. I appreciate it.
Appreciate you. Let's do it again.
We should.
All right.
And everybody at home, I would advise you to keep your eyes peeled as well for more YouTube episodes as they come in the future. And if you have anything that you would like to tell UNE about, then I advise that you can contact me. My email is ijordan1@une.edu. Just come into contact, and I would be very happy to have you on. So thank you very much again for tuning in, and we'll see you in the next one. Bye-bye.